Timing your swing trade exits. Morning, everybody. Welcome to today's Morning Coffee with Mike. And we are talking about how to capitalize on market strength, how to sell your trades and lock in the bulk of the profits. We'll be going through selling into Parabolic Moves. Oh, I've got echo in there. All right. Got rid of that echo. Sorry about that. Okay, so again, we'll be talking about selling into parabolic moves, allowing trades to pull back, reasonable levels to allow them to pull back, how to identify those levels, as well as scaling out of portions of your trade. So that way you could let bits of your trade run further without the worry, the fear of losing out on the bulk of your profits. All these are tactics that I explain in detail in the Trading Mind Wheel book. So if you haven't gotten this book yet, I highly recommend that you go get it. It's available on Amazon, Barnes and Noble, and everywhere else books are sold. So let's dive right in. Share the screen, bring Instagram over to here, clean up the charts a little bit, and get you guys over here on YouTube and Facebook, LinkedIn, Twitter going. Okay, great. So you might notice that I've got four charts up. The reason why I have four charts up is because I like to look at every single chart on multiple time frames. I like to look at monthly charts, weekly charts, daily charts, and 30-minute charts. And you might be asking yourself, well, that seems like a lot of charts to be looking at. Why do you want to look at so many different charts? The reason why I want to look at so many charts is because multi-time frame analysis is a way to see things from an aerial view and then drill down further and further and further and get very, very granular with our entries, our stops, how we're going to manage and sell trades. It makes the whole process a lot easier and a lot more precise. That's why I do it in this way. So let's talk about a few recent trades. One of my most recent trades is this one here, SMCI. And so this was a trade, right? And so why don't we start out with that larger view, right? So when you see price that is running up like this is the monthly time frame. It's starting to look a bit parabolic there, right? You're starting down here. The slope is progressively increasing, 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 and getting close to a top there. But when you're thinking about parabolic moves, also important to consider the other time frames as well. Is it looking parabolic on, say, the weekly time frame? It You might make that argument. You might make the argument that it's starting to pick up steam right here. One of the things, right, and this is a pro tip for parabolic moves on a weekly time frame. You want to take a measurement of where price is at versus its 40-week line, the 200-day moving average. Right now, it's closing in on 60% above the 50-day the 40-week moving average. So what does that mean? What it means is that it's not that extended yet. And the reason why is because historically, when price gets more than 100% above the 40-week line on the top growth stocks, momentum stocks in the market, that's when it starts to peter out. Based on that, this has a little bit more room. Though you could look at the structure and say, yes, that is extended. We don't want to just have one reason to sell or to lock in gains. That's a big part of trading too. If we only had think of it like this. If you were in a building and there was only one exit and there's a fire, you're going to be in trouble, right? Everybody's going to be stampeding for that one exit. What happens if that one exit is blocked? You can't get out. Then you're really screwed, right? So you want to give yourself multiple ways to exit trades, thus multi-time frame analysis, thus multiple strategies and tactics on how to manage trades. back to the charts. So uh, let's take a look at the daily time frame. Over here on the daily, you can see that price was consolidating, started to lift off over here and consolidated again over the past couple of days here. To put my own annotations back on, actually, this point, my annotations look a little bit all over the place. Let's get rid of those. But basically, what I wanted to share was that when I entered this trade, I had a couple of entries on this. The most recent one was down here, right down here, right as price was consolidating along that purple line, the 21-day exponential moving average, and lifting off of it right there. Seems pretty darn precise. Well, when you look at that, right? Like it's easy to see now, obviously, but in real time, if you're looking at it, you're looking at this. How do you know that price is going to lift there? The short answer is you don't know. What you're always looking for is uh, high probability, high reward, low risk opportunity. So, what makes this high probability and low risk? Part of what makes it high probability is that it's already in an uptrend and it's pulling back to a key moving average, the 21-day moving average that it has not tested before since breaking out down here. This is the first time that it's testing that. So, that in itself gives it a little bit higher of a chance to bounce. Another thing is the volume that came in on this trade as it's running up, and then the volume that tapered off a bit as it's pulling back, and how it's also the price action itself, how it's consolidating, it's getting tighter, it's kind of orderly around those levels there. And those types of things are allowed it to bounce. But it wasn't just that. It was using this multi-time frame analysis. If you come over to the 30-minute time frame, and that's where I start to look at the 30-minute time frame too, to really get surgical with these, I'm able to see that it's getting real good support right there, and that there's an entry price. If price breaks above here, which it did, then it shouldn't turn around and reverse and start to push lower. That would be a breakout failure. So just that gives it a very tight area to get into. This between here and the 21 period moving average was only about 4.5%. This is a stock that moves about 6% per day. So very tight area. So parabolic moves. We spoke about parabolic moves. How about allowing trades to pull back? How are we going to hold this thing through this move here? When do you know when to sell? One of the ways is to give yourself multiple ways to exit trades. Remember earlier when I mentioned that I like to have multiple ways to exit trades? This is what I'm talking about now. So you want to sell into strength. That's part of it. You want to sell when there are danger signals, right? You want to come up with danger signals for yourself. What are danger signals? Danger signals are signs that the trade is starting to roll over and move against you. Here's another thing. You want to have backstops where if price falls below a certain level, then you'll automatically exit the trade. So this is a trade that I was in and I actually exited yesterday. Why did I exit yesterday? Because yesterday it fell below my backstop. So I got in here. This trade ran over 40%, and I sold the last bit of it that I had at about a 30% gain, just below those lows there. So the reason why was because on this day, price pushed higher, made a fresh high, reversed, closed on its lows, and I counted up 8 danger signals on that day. 8 danger signals on the day. So what does that mean? That means that there were 8 major violations that I saw in the stock that told me that it's time to go. So what I did was I raised my stop to below that daily low it violated it. And then so far, it's pushed down lower, reversed, and now it's consolidating a bit more. So just because we exit a trade, that doesn't mean that the trade is necessarily done. What it does mean is that we want to position ourselves so that we lock in the majority of gains. We're never going to catch the exact top. We're never going to catch the exact bottom. What we want to do is capture the meat of the trade. You've probably heard this before. We want to capture the bulk of the trade, and that is what's going to allow us to compound gains again and again and again. Versus when we start to see trades have these danger signals and we kind of hope that it's going, maybe we do a whole bunch of research, right? We're going all over the internet and we're finding stories of why this stock should do X, Y, and Z and how this is going to be the game changer of the future. Well, price is the only thing that actually pays. Price is the only thing that's going to put money into our account. So if we find signals, right? Like if we find objective ways that say that, hey, there's certain things that show us that things are beginning to weaken, then if we sell, then we're able to lock in profits. And we could always get back in. That's where other tactics start to come into play, other re-entry tactics. Perhaps that could be the topic of a new or a future live stream. Let me know if that's something that interests you guys. Advanced tactics on entry. Uh, so we spoke about selling into parabolic moves. We spoke about allowing trades to pull back. We spoke about scaling out of portions of the trade, right? So again, here to give a little bit more detail on scaling out of portions of the trade. So my preferred way to a lot of portions of trades. And it's also something, again, that I mention in my book, The Trading Mind Wheel. I mention specifically what I do, but I give the rationale behind it and suggest ways on how you might want to incorporate this for yourself, whether you're trading similar to me or you're not, or you're longer term, shorter term, or whatever it is. It's all in the book. So, what I like to do when I'm going to scale out of trades into strength, I like to think of my trades as a chessboard, right? And if we're playing chess, there's different ways to think about the game of chess. There's the open game where you're just getting started as far as the trade goes. That would be entering when I entered right there. And during the open, our first objective in chess is to start to develop our pieces, right? So we're starting to move out the pawns, maybe move out a knight, a bishop. In trading, the way that I see our first objective is to get risk off the table, right? So my initial risk, if you remember, started down here. I want to get that risk off the table as quickly as I can. And the reason why, and I'll come over here so I could uh, draw a bit on this chart. The reason why is because if you're thinking about your wins and your losses, right? So we'll say wins are over here and losses are over there, and this line is 0. The more our wins are out to the right and the closer our losses are to 0, the less heavy lifting these wins need to do. So let's say that we have a loss that's over here. Well, then this win brings the account back to break even, right? Where we're back at 0. But if the loss isn't there, but if it's over here, then all of a sudden the equity curve is marching higher. That's the big benefit of keeping losses as small as possible. And it's the reason why when I'm trying to look at my that first part of the trade, when we're talking back up here, that's why objective one is get that initial risk off the table, so that way the win doesn't have to do as much heavy lifting. Second part, the mid game. Mid game is to get myself to my average gain, right? So Generally, my average gain is twice what I've risked, roughly 10%. Then I'm trying to extend towards high watermark, and then I'm letting the last bit of the trade run. So it's just letting the trade go for as long as it's going to possibly go. And you can see here that it's already beginning to reverse. So anyhow, uh, that is that's how we can get into some of these momentum trades, some of these big momentum growth names, ride them, sell into strength, lock in profits, and a lot more. Let's answer some questions. I see the chat blowing up over here. Okay, so question from Alberto over here on YouTube. Alberto actually has a bunch of questions. Let me answer these ones over here first. Which moving average do you use for an entry? 2150. Your thoughts, please. So if I'm going to enter based on a pullback, then the longer the term moving average, the better. And the reason why is because if we're looking at a moving average as being support, as being a floor, we want the floor to be as sturdy as possible. Now, let me show you a trade that I attempted today that didn't work out. Here's one that did not work out. I tried to get into Palantir, right? And here's what I did with Palantir. Let's go over to the 30-minute. So this was yesterday's close, right? So as of right there. So the way that I'm looking at this and that green line, that's the 10 period exponential moving average from the daily time frame. So what I'm seeing is that price is consolidating and pulling back to the 10 EMA and getting nice and tight in there. And the very last bar of the day, it had some volume coming in. And I also saw some really tight action towards the end of the day. So my thinking is that I can attempt to get in nice and tight and risk only 2% on the trade, and if it works, then I've only risked 2% on the trade itself, right? Distance between the entry and the stop. For capital, I'm risking only 0.15% of capital. And my upside on it is tremendous. I went in with a 7.5% position. So if this went that would have been nice. But didn't work out. Here's what ended up happening. Triggered the entry, fell right below the stop. I'm out. 2% loss on the trade itself, lost 0.15% of capital, and that one didn't work out. Generally speaking, the 21 and the 50 period work out better. Sometimes I'll attempt off of the 10 EMA when it's in a big momentum name. Palantir it has been one of the leaders, and it's also been a sector leader as well. Sector leader being a stock that's in a leading group, in a leading sector, and also leading its sector. It's been one of those too. So that's why I attempted the aggressive entry on Palantir. Didn't work out this time. Other question from Alberto is, where would you place your stop loss if you're using a moving average as entry point, specific points or percentage below your entry point? Just trying to learn. Apologies if already answered. I think we kind of answered that one already, but just to help clarify, when I'm going to place my stop, I'm looking for multiple layers of confluence, both across time frames as well as on the chart itself. So I'm looking at support levels, I'm looking at moving averages. When I'm getting very granular, right, I go deeper than what we even did here. I'll throw on Fibonacci retracements. I'll take a look at anchored VWAP from key levels, and just trying to stack as many things as they can around a support level because what it does is it draws more eyeballs to a certain level and gives it more reason for why price should be supported. And if price doesn't get supported, then it gives me more conviction in saying, okay, enough is enough. See you later. All right. Hopefully that helps. Let's answer some questions from the Instagram folks. Don't want to neglect you guys. Let's see here. Instagram just scrolls so quickly with people hopping in uh, into the into the chat. Like every time that somebody comes on, it announces it. Um, Question from Akesh: what is a good expectancy in trading? It really depends on how often you're trading. It depends on your risk. It depends on a number of factors. It depends on what it is that you're looking for. So, generally, for me, what I'm looking for, I want at least 2 to 1 on my trades. So, that generally tends to be what my performance has been. I'll risk one and end up making two, and I'll be right about half the time. So if you were to take a coin, right, just happen to have a coin right here, you take a coin, you flip the coin, you're right half the time, you're wrong half the time. So long as you're up twice the amount that you've lost, then that's a winning system. And there could be many different ways to skin that cat. There's actually some tables that explain the stats behind all that inside my book, The Trading Mind Wheel. Highly recommend that you grab a copy of that and read it. Hello from India. Welcome. Always nice seeing you guys. Let's see what other questions you guys have here. Dr. Stocks, welcome, Eduardo. Humility wins, yes, indeed. Very, very important quality. Well, one of the ways to that we can learn, right? If we're open to learning lessons. If we're not open to learning lessons, life has a funny way of dealing us the same lessons until we learn them. Uh, all right, so let me answer Alberto's next question here. With Palantir, would you try to re-enter based on the next moving average, say the 21, or would you stick to your original moving average? Just wondering. Great question. Really like that one. Okay, so the way that I would trade this, and also this is a very good point as well. Alberto, you seem like you are that you had some experience, so we'll go a little bit more advanced here. One of the reasons why, so SMCI was on my radar for a reentry yesterday. The reason why I did not take this one, and it looks like it was a good idea to not take it. At first, I was kicking myself. I should have tried this one, but I'm glad that I stuck to my rules and did not. So here's what I saw yesterday on SMCI. I saw it make this little double bottom, right? A double bottom. It has the essence of the double bottom. A true double bottom should be 7 weeks long. This is obviously a 30-minute chart and not 7 weeks. But what I saw towards the end of the day was this structure start to form and then a handle form right here, but it broke out before the close. So the reason why I didn't take this one is because it if I took it there, then I would have to deal with the overnight risk of holding it based off of an intraday move and the risk of it gapping down. These intraday support levels are not nearly as firm as what you would find on a daily or weekly. They could easily be broken, like it's starting to get broken now. So What I like to do is to wait until the following day, the following morning, and then use the intraday time frame to get really super duper narrow. And the reason why is because if we go back to Palantir, let's say that this worked and it started to run. Then I've got the new daily low as my stop level. And it's got all day to try to shake me out of this thing. The thing with using intraday support levels like this and using them for swing trading is that they'll either typically work right away or you'll get kicked out of the trade immediately, like in this one. One that worked recently. Like this. We spoke about SMCI earlier, but here's another one. Right? Unity software. So I did that on this bar right here. Very similar strategy, right? You could see how price was consolidating. This time it came right down to close to the 10 and then broke out over here, ran 10%, gave me a couple of scale outs, and then I got out of the rest close to break even. What I'm looking for when these things happen, it's not just the test of the moving average. I'm also looking at structure. I'm also looking at how price closes towards the end of the day. Um, is volume starting to come in? Is there a way to get in structurally well? And is the price action tight enough where it warrants this kind of aggressive entry? So, for example, back here, the distance between my entry and my stop was only 2.5%. If I come over to this part of the chart and I'm looking down here, this down here, if you guys are able to see that, this down here is telling me the percent daily range over the past 20 days. So what's the average range of the stock price uh, each day? For Unity software, it is about 5.5%. So if I'm getting in with a 2.5% stop, then there's a very strong chance that I'll be at twice my risk just based on the regular move of the trade. That's something that I like. It's not going to be the only reason that I take a trade. There's a whole gauntlet, a literal gauntlet that I put trades through. And the gauntlet is over here. Something else that I talk about quite a bit in the Trading Mind Wheel book, but you could access the Trade Gauntlet for free. So I just put up on my website, marawealth.com. You go over to links and you go to Trade Gauntlet Calculator, and you could pull up the Trade Gauntlet that I use. It's basically a weighted average checklist of all the things that I want to see in a trade before I take it. And then if it happens to score above a 7, right? So it gives you a score at the end after you go through all this and make it run the gauntlet, check off all the boxes. If it scores a 7 or better, then I'll take the trade. If it doesn't, then I won't. Simple as that. That's my hard line in the sand. And it's also a hard line to wrap things up here because we are a bit over and out of time. So I want to say thank you guys so much for joining me today. I truly appreciate it. I look forward to seeing you guys next week. If you have topics that you'd like to discuss, please write them in, put them into the chat, message me, set up a smoke signal, whatever you have to do. And make sure that you like and subscribe to the channel if you haven't already. Make sure that you grab a copy of the Trading Mind Wheel book. If you've already gotten a copy, make sure that you leave a review on Amazon, especially if you liked it, because that's going to help other people discover the book. I appreciate you guys. It's great talking to you every week, and I'll see you again next week. Take care. Have a great weekend. Much love. Peace out, everybody.